It's earnings season, and the week of April 27th to May 1st is one of the biggest of the year. We're talking about the 5 largest companies in the world by market cap all reporting within 4 trading days. Alphabet, Meta, Microsoft, Amazon, and Apple combined market cap of over $12 trillion, all dropping their numbers this week. Plus oil majors ExxonMobil and Chevron, Verizon, Starbucks, and Qualcomm. In total, over 160 S&P 500 companies report this week. This is the video where we walk you through every major name, day by day, what analysts expect, how much the stock has moved, what the RSI says, and what could surprise in either direction. Here's your earnings calendar for the week. Monday kicks off with Verizon, ticker VZ, reporting before the market opens. The stock is trading at around $46, up 18% year-to-date, but sitting 10% below its 52-week high. The RSI reads 38 firmly in oversold territory, which actually makes this an interesting contrarian setup heading into earnings. Verizon is not a growth story. It's an income story. With a dividend yield around 6.4%, the market treats it as a bond proxy. What analysts are watching: postpaid phone net additions and fixed wireless broadband subscriber growth. Verizon has been aggressively expanding its fixed wireless home internet service. That's the key growth driver. The analyst consensus target is around $52, implying 11% upside from here. The bull case: broadband additions beat, and the dividend is reaffirmed, which would attract income investors. The bear case: wireless pricing competition from T-Mobile and AT&T continues to pressure margins, and debt levels remain elevated from the C-band spectrum purchases. Expect low volatility on this one. This is steady Eddie territory. Tuesday is the busiest day of the week by far, 5 major names reporting. Let's start with the warm-up acts before we get to the big tech names. BP plc reports Tuesday morning. At around $46, BP is up 31% year-to-date with an RSI of 43, slightly oversold. The key question for BP is whether oil revenues can sustain the dividend, as Brent crude has softened from its highs. BP has been shrinking its renewable energy ambitions and refocusing on oil and gas. The market will want to see whether that pivot is generating the free cash flow needed to support buybacks. Analyst consensus target is around $48, just 4% above current levels, meaning Wall Street sees this as fairly valued. Then Starbucks, ticker SBUCks, also reports Tuesday morning. At around $99, up 18% year-to-date. RSI 67 momentum is building. This is one of the most watched turnaround stories in consumer. CEO Brian Niccol, who pulled Chipotle out of a food safety crisis, joined Starbucks in late 2024 and launched the "Back to Starbucks" strategy. Simpler menu, faster service, better in-store experience. The market is pricing in early signs of recovery. Comparable store sales is the single most important number. If comps are positive, even slightly, this stock could pop meaningfully. If they are still negative, the sell-off will be sharp. Now the big ones. Alphabet, ticker GOOGL, reports Tuesday after the close. The stock is at around $344, up 9% year-to-date. The RSI at 82 is deep in overbought territory. The stock has run hard into earnings. Analysts expect EPS of approximately $14 for the quarter. The consensus price target is around $377, implying 10% further upside. There are 2 questions dominating this earnings call. First, Google Cloud. The cloud business needs to show it can compete with AWS and Azure. Any acceleration in cloud revenue growth would be a major positive catalyst. Second, search advertising revenue. Alphabet has integrated AI overviews into Google Search, which shows AI-generated answers at the top of results. The worry was that fewer people would click ads if the answer was right there. So far, Alphabet has maintained that ad click-through rates have held up, but the market wants to see proof in the revenue line. YouTube advertising revenue is also closely watched. It's become a genuine TV competitor. Bull case: cloud accelerates above 30% growth, search ads hold steady, and management raises full-year guidance. Bear case: AI overviews cannibalizes ad clicks, regulatory antitrust pressure mounts, and the stock, which has run significantly, sees profit-taking. This is a must-watch earnings call. Meta Platforms, ticker Meta, also reports Tuesday after the close, trading at around $675, up 4% year-to-date, with an RSI of 80. The stock is extended, but the AI narrative continues to drive buying. The analyst consensus target is a striking $855, implying 27% upside from current levels. EPS consensus sits at approximately $36 for the quarter. Meta's story in 2026 is simple. AI is making ads dramatically more effective. By using machine learning to match ads to users with unprecedented precision, Meta is commanding higher prices per impression, higher CPMs, and higher conversion rates. Instagram and Facebook together remain the dominant digital advertising duopoly alongside Google. Threads, their Twitter competitor, has been growing but is not yet monetized, which is a future revenue lever the market is beginning to price in. On the negative side, Reality Labs, Meta's metaverse and hardware division, continues to burn billions of dollars per quarter. This remains a genuine controversy. Zuckerberg believes the metaverse is the future. Many investors believe it's capital destruction. The bull case here is powerful. If AI ad targeting continues to compound, Meta could earn its way to the target price faster than most expect. A beat and raise would send this stock significantly higher. The third major name Tuesday evening is Microsoft, ticker MSFT. At around $425, Microsoft is actually down 10% year-to-date, underperforming peers, which makes the valuation more interesting. The RSI at 75 shows the stock has recovered sharply from recent lows, and it sits 24% below its 52-week peak. Analysts have a consensus target of around $576, implying 36% upside, one of the largest target gaps in megacap tech. EPS consensus is around $19. For Microsoft, three things matter above everything else. 1. Azure cloud growth rate. Azure needs to show it's growing faster than 30%. Anything below that will disappoint. Anything above will catalyze a re-rating. 2. Copilot revenue. Microsoft has embedded AI Copilot into Office 365 and is charging a premium of $30 per user per month. This is the first quarter where Copilot adoption should be meaningfully visible in the numbers. 3. Gaming. The Activision acquisition is now fully integrated, and the market wants to see Game Pass subscriber numbers accelerating. Given the stock's year-to-date underperformance, any positive surprise here could produce an outsized reaction. Microsoft is the highest potential mover of the three Tuesday reporters, in our view. Wednesday belongs to Amazon, ticker AMZN, reporting after the close. At around $264, up 17% year-to-date, Amazon is essentially trading at all-time highs. The RSI at 95 is extremely overbought, which means the stock has priced in a lot of good news already. EPS consensus is around $9, and the analyst target is around $284, implying 8% upside. For Amazon Web Services, AWS, is the beating heart. AWS generates approximately 70% of Amazon's total operating income, despite being a fraction of total revenue. Any acceleration in AWS growth above 35% would be a major positive. The second story is advertising. Amazon's ad business has quietly become one of the top 3 digital advertising platforms in the world, alongside Google and Meta. It's now running at over $50 billion annually and growing fast. Retail margins are the wild card. Amazon has been ruthlessly cutting costs in its logistics network, and the payoff should be showing up as retail operating profit. The risk: with the stock near all-time highs and an RSI above 90, any guidance that falls short of the market's elevated expectations could produce a meaningful sell-off even on a decent quarter. Buy the rumor, sell the news is a real risk here. Thursday's headline is Apple, ticker AAPL, reporting after the close. At around $271, Apple is essentially flat for the year, up just 0%. The RSI at 62 is in neutral territory. The stock is neither overbought nor oversold heading into this report. It sits 6% below its 52-week high. Analysts expect EPS of approximately $9, with a consensus target of around $298, implying 10% upside. Apple's earnings story has 3 chapters right now. Chapter 1, iPhone. China is the critical market. Huawei has been recovering market share in the premium segment, and any weakness in Chinese iPhone volumes will be penalized heavily. On the other hand, India is showing strong double-digit growth. Chapter 2, Services. This is where the real margin expansion lies. The App Store, iCloud, Apple Music, Apple TV+. Collectively, this is now a $100 billion revenue segment running at margins over 70%. Any acceleration in services growth rate is the most important positive surprise scenario. Chapter 3, India Manufacturing. With US-China tariff tensions persisting, Apple has been accelerating its shift of iPhone manufacturing to India, an important strategic hedge. Investors will want to hear a concrete timeline. Apple is the final megacap to report and will likely set the tone for the market's view on big tech into the summer. Also Thursday, Roku and Qualcomm. Roku, ticker Roku, trades at around $115, up 6% year-to-date, RSI 74, somewhat overbought. Roku's model is platform first. They sell streaming devices near cost and make most of their money from the advertising platform on the Roku channel. Active accounts and average revenue per user are the metrics that matter. Streaming TV advertising has been taking share from linear TV rapidly, and Roku is one of the primary beneficiaries. The analyst target is around $128, suggesting 11% upside. This is a smaller cap name. Expect bigger percentage swings on the report. Qualcomm, ticker QCOM, is more interesting from a risk-reward standpoint. At around $149, Qualcomm is down 13% year-to-date, sitting 28% below its 52-week high, and yet the RSI at 83 shows strong recent recovery. Qualcomm is in transition, from being primarily a handset chipmaker to becoming a diversified semiconductor company in automotive, PC, and EOT. Their automotive design win pipeline stands at $9 billion. Revenue from those wins is just starting to flow. The Snapdragon X Elite for AI PCs is also a material new opportunity. For a stock trading well below its 52-week high, a solid quarter and raised guidance could produce a sharp re-rating. Friday wraps up the week with the energy majors and AbbVie. ExxonMobil, ticker XOM, is at around $149, up 22% year-to-date, but with an RSI of just 26, deeply oversold. Energy stocks have been sold off as oil prices softened. The key for Exxon is Permian Basin production volumes and cost discipline. Exxon's Pioneer acquisition has given them one of the largest Permian footprints in the industry, and the cost per barrel should be declining meaningfully. The analyst target of around $164 implies 10% upside. Wall Street remains constructive. Chevron, ticker CVX, is in a similar position. At around $185, RSI 33, also oversold. The Hess acquisition, which gives Chevron access to Guyana's offshore oil fields, is still being integrated, and investors will want clarity on the synergy timeline. Analyst target is around $211, implying 14% upside. Both oil majors are beneficiaries of any geopolitical catalyst that pushes Brent crude higher. Finally, AbbVie, ticker ABBV. At around $199, down 12% year-to-date, RSI 40, also oversold. AbbVie lost its Humira exclusivity, but the replacement drugs Skyrizi and Rinvoq have been growing explosively and are on track to exceed Humira's peak revenues. Analyst consensus target is around $249, implying 25% upside. Any positive data on Skyrizi adoption or pipeline progress could send this oversold, high-yielding name significantly higher. So what's the single most important thing to watch this week? Tuesday evening is going to be one of the most watched moments in market history. Alphabet, Meta, and Microsoft all reporting after the close on the same day, each conference call happening simultaneously. The unifying theme across all 5 big tech names is artificial intelligence monetization. Not AI hype, but actual revenue flowing from AI products. The market is paying premium multiples, because it believes AI will dramatically expand the earnings power of these companies over the next 5 years. This week's earnings will either validate that belief or begin to question it. On the other side of the ledger, ExxonMobil and Chevron both have RSIs in the mid-20s to low 30s, deeply oversold, and with analyst targets implying 10 to 14% upside. A decent quarter from either could trigger a sharp recovery in energy names. One final risk worth flagging: Amazon and Qualcomm are both sitting at RSIs in the overbought zone, meaning any disappointment in guidance, even on a solid beat, could produce a sell-the-news reaction. This is one of the most consequential earnings weeks of the decade. Stay tuned to StokTok. We'll cover every report as it drops. Like and subscribe so you never miss an earnings update. Everything in this video is for educational purposes only, not financial advice. For a complete deep dive on every one of these stocks, valuations, financial health, smart money signals, and our buy, hold, or sell verdict, head to our YouTube channel at youtube.com/@StokTok Club or visit StokTok.club, where every analysis is available for free.